In this video, we're going to have a look at the deduction of donations made to public benefit organizations in the calculation of taxable income. So as always, I'm going to start off the video by just contextualizing and showing you where we are in the taxable income framework for working out the taxable income of a taxpayer. We're going to be dealing with donations. We refer to them in short as donations, but it's not donations that are subject to donations tax. A donations tax is a different concept. So we are looking at the deduction of donations to public benefit organizations for the calculation of taxable income. They're also subject to certain limitations. So because of the limitations, it's always important that you total up your taxable income at certain points of the calculation. After the taxable capital gain is one such point, and then again after retirement fund contributions, so that you get the right taxable income to apply the limitations for the deductions. And then obviously you're going to total it at the end for taxable income, because then you have to go and use the tax table. Right, so let's have a look at the concepts in donations. Well, first of all, we need to make sure that any donation that we want to deduct for the taxpayer has been made to an approved public benefit organization. Now, in terms of being given the information will have to tell you that the taxpayer received a Section 18A receipt, or a Section 18A receipt was issued by the public benefit organization. This shows that the donation has been made to a PBO and that it does qualify for deduction for income tax purposes. So what you first got to do with the donations deduction is make a list of all the donations made by the taxpayer if they've made more than one. And then you need to show those that are made to non-qualifying organizations, so where Section 18A receipt has not been issued, because we don't expect you to know. In fact, no one can know until they receive that 18A receipt that the organization is a qualifying organization. Please, in terms of exam procedures, or not exam assignments, or answering questions for tuition purposes, don't ever just leave an amount out. You need to indicate it with a zero, and generally, if you indicate a zero, you need to give a reason. So you need to say that it's a non-qualifying organization. Okay, so once you've got the total of all the qualifying donations, then it can be deducted from taxable income, but subject to a limit. And the limit is 10% of the taxable income before this deduction. And that's why I told you in the income tax framework, or the taxable income framework, that you need to calculate the taxable income before this deduction, and you also need to show the calculation of the limit. So the use of the words taxable income doesn't earn you any rewards in terms of marks. You need to show that you know it's the taxable income before this deduction. Okay, so just once again, once you've calculated the limit, you're going to apply the limit to the donation. So it's very similar to the deduction of retirement fund contributions, and you're going to want to know if the donations are going to be limited for deduction, or if you can deduct them in full, because the taxpayer would like to deduct their donations that they've made in full. So if the donations that qualify are less than the limit, then you'll deduct them in full. If the donations that qualify are greater than the limit, then obviously you're only allowed to deduct the limited amount. Just remember to always show the limitations and the application of it to your calculations. Okay, and then in the next video, we're going to work through an example together.